When I moved to US back in 2008, I have to deal with not only with transition, but the ongoing economic crisis at the time. If you recall, 2008, there was a global financial crisis, primarily due to subprime mortgages. And I will talk about my transition in future videos, but today I want to give my brief reflection on what I learned and how it could relate to Ethiopia briefly. Um, so basically, with the subprime mortgage, with all other players on the play, like individual homeowners, buyers, mortgage originators, banks, and investors, all there was a big assumption, which is at the core of this whole process, which is a speculation that home price is continuously going to grow and the whole housing market is going to boom. So everyone has an incentive to play a part in it because as an individual homeowner or aspiring homeowner, even though I don't have the resource, I have every reason to buy now because I may have a chance to sell it or to refinance it at a higher price to service the loan. And even for the mortgage originator, even though they don't have the intention to hold uh, the loan amount indefinitely, they have the option to securitize it using mortgage-backed security to investors at a relatively fair fee. So mortgage-backed security seller or the originator or the banks, they have interest in selling as much uh, loan to home buyers and investors. They are always looking for opportunities, and what does this mortgage originators does is they include some average variable rate term in the loan, whereby even though the loan starts at a minimum interest rate, it has a potential to grow, so that investors anticipate a higher income when they buy this mortgage security. But for now, the mortgage originator, in their underwriting, they make it appealing for buyers because the upfront payment or interest payment is minimal. So this bring a lot of excitement and a working model for all players in the housing ecosystem. And mortgage originator used some terms like some process like ninja loan, what you call no income, no interest, no asset, and no job, which means they are willing to extend loan for individual who are interested to buy home, even though they don't have income, they don't have asset, or they don't have job, which means they are selling risky asset to individuals. So by this, they are extending as much loan to individuals. So many housing loans were dispersed as of this process, but they immediately packaged it to investors and other mortgage-backed security buyer as part of the securitization process, whereby they sell it to some government-owned institution like Freddie Mac, Fannie Mae, including Lehman Brothers, and globally to other several pension fund, institutional investors, sovereign wealth fund, all were involved in buying this mortgage-backed security from this individual loan. So with the anticipation that everybody is benefiting, the system has worked and everybody was benefiting, the market is booming, so many real estate firms are producing as much real estate with this anticipation. But what happened is over time, due to the main process, how these loans were packaged, individuals were not able to finance the loan. And many of the borrowers find themselves that the asset, when they are not able to borrow and they are not when they are not able to make repayment, most of these investors who are expecting for the future cash flow from direct payment from the borrowers, they see that it's getting stuck. So the fund that is allocated for such engagement is getting minimal in a way that cause some distress in the housing market. It slows activity in new construction. It diminish the price for the house. That means many borrowers find themselves now the property they own is much lesser than the liability they owe to the financiers. So this create a shock for the whole system, and banks and investors were lost. They did lose their trust in buying this securitization. That being a loss that create a lot of significant losses to the investors, and many of the borrowers see their mortgage being foreclosed. So this whole process with the lack of regulatory oversight lead to a new closer look of how this whole process work, how borrowers could be protected because the teaser approach the bankers use to get the borrowers borrow beyond their capacity, beyond their ability to pay. It also has some risk that needs government intervention. So this is an interesting model that shows how that speculation turns out for majority of the player to benefit in the short term, but how it leads to significant losses. So to relate to the basic factors here in Ethiopia, we are not exception. We do operate with a similar practice that housing market is going to boom, and banks rely heavily on housing and real estate as a collateral, and the chance is if you have a collateral, there is a likely chance that the banks would offer you loan with less due diligence, with flexibility in terms of your paying power or your repayment capacity and related due diligence. And that shows even how, as per National Bank report, how majority of the bank loan were diverted into selected companies, selected individual, which leads to overall risk of concentration in a certain areas, whereby any major problem leads to a significant mass, significant loss, and impact the sustainability of the business. So it's better to diversify the whole process, and when it materializes, it could create a lot of shock and a lot of additional regulatory oversight, plus due diligence and intentional measure from the bank is important in not being exposed to significant challenges or setbacks that we see like back in 2008 in the global financial crisis. I hope you find it helpful. Look forward to any thought or insight. Thank you.